This table shows the incremental free cash flows for a typical project and includes all of the cash flows that you're likely to come across in this subject. We will begin most of the remaining modules in this topic by selecting one or more of the cash flows in this table and looking at it in more detail. In this module, we'll look at the initial outlay, which normally comprises the purchase of equipment and may include other initial development costs. Ordinarily, the purchase of equipment is classed as capital expenditure. If expenditure is classed as a capital item, it means that it will be depreciated over the life of the asset rather than being tax deductible when the cash flow occurs. Other costs that are incurred in getting a project up and running may be capital in nature or may be operating expenditure. If an expense is going to be capitalized, that means that it is included in the value of the asset which is going to be depreciated. Initial costs may be classed as operating expenditure rather than capital expenditure. If an expense will be written off, this means that it will be claimed as a tax deduction immediately. These costs occur at time period 0 at the beginning of the project, but if some initial expenditure is classed as operating expenditure and will be tax deductible, the soonest that can occur is in year 1.